fire now is closing in. Nothing bear and nothing to win, nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Step in the fire, take my hand, I'll take you higher than you've ever been, than you've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share, an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go. And boom, it went. Bitcoin, as it stood at the 382 of this diagonal pitch fan up to the upside that we had price trapped in since January. It broke through that and started to make its way down to the 236 of this mean reversion path to the upside we've had on the charts. It's been respecting these levels, and sure enough, it broke through with a fury. And the rumor on the rumor mill is that SpaceX sold its Bitcoin, 370 million of it. So yeah, it's clear. Let's go into the liquidity to be more specific, but clearly the imbalance is to the upside. But let's go into high block. What is high block? Well, people lock their liquidity into the charts to get burnt to a crisp by the market maker for not using a stop loss. And those crispy characters get displayed on this nice little graph with the bubbles and whatnot. So we were watching this slow descent to the downside in the beginning and watching these bubbles be displayed as such. We're seeing the imbalances up here at 28.86, $253 million characters, his partner in crime up at 29.436, and a stacked range up at 28.736. Also partner in crime 28.639. And I don't know why it does this, but it sometimes doesn't display properly. I guess it gets updated with the real-time data. And hello. There we go. Let's go do this again. So they came back for these 100xers every time, but they left the 100x here, the $150 million pool, and then more shorts entered into the fray, and then we started to see this drop down from 28.4, and then last stream we were seeing the rocket ships appear, and we gobbled up that, we had that V-shaped into the liquidity of this $251 million pool, left the partner in crime at 50x, and had that huge bleed to the downside thereafter. It was 6 a.m. my time. I remember opening my phone, seeing it like, wait, what? I haven't seen this in a while. And it was Elon, surprisingly, who caused that to occur in May. We'll go over that in a minute too, but it seems to be Elon at the center of all this focus every time there's a huge drop. So this $381 million short pool that is opened up here, did SpaceX just flip positions as they sold their Bitcoin and flipped the position? Because there's this huge imbalance down below. The reason why we had that V-shaped is you had all those shorts, 50x and 100xers, opening up into this large candle, in which they came back and gobbled up all these characters all the way up to, let's zoom in a little bit more, all the way up to that $378 million 25x pool. So the guys that entered shorts into that candle immediately got gobbled up.
Fatality.
And that's what happens when you try to ride the red candles. So the last time, we'll go over the last time there's a flash crash like that. I can recall 2 of them clearly in my memory and what happened at the time. So we'll go over those examples of what happened. And let's go. So right now you're seeing this appearance of stabilization as they decide where to go, if this will go out of here. So we started to break down back into the long liquidity. The band was thicker, clearest here. They came back to the 100x, and then they came back down, gobbled it up. Some more shorts entered here, which paid the price, and they came back and ate those shorts. Did they have the strength to round out here and come up? The imbalance to the shorts now on the 1 minute time frame is a whopping 24.87 billion. However, when they reprice, we talked about this, when they reprice the algorithm down lower, they just leave some pools there, and that is the way the cookie crumbles. And why is that? Well, let's expand our vision to the external pools. The 7-day got cleared completely, pretty much. The imbalance to the upside, we're not going to go into the details on that. Monthly as well. External pool of the monthly got cleared completely. Imbalance, you do have these double digits down low, sub 25k, that is on the potential target. Why is that? Well, if you start to expand the vision to the 3-month and the 6-month, you notice we ate into a chunk here at 24.6. There's a $61 million pool that they went back into. The imbalance on the 3-month and the 6-month, we've been saying, has been the imbalance to the downside. So these are the external pools now which they are targeting. There wasn't much here for them to grab. By not much, there's still double-digit pools in the $50 billion range, but still thin by comparison to what's here and what's there. So this sub 25K place position has these rich pools specifically at 24.3, $180 billion. So they may not be done. This may be just B consolidation, the idiot box, if you will, for it to trap more traders to take it lower. I would expect a little bit of a retrace. A B wave can go up like a lightning bolt, so it will go up into the vector a little bit and then possibly fail to come lower. There are no guarantees, so let's go into the 2-year and see where the imbalance lies. So it looks like they reclaimed it on that wick and took out that $241 billion pool at 24.4. I don't know if we went that low, but maybe that 80% notification or whatever closed out those positions. So that caused this to rebound back up. So the imbalance on this 2-year chart has been reconciled. This $241 billion pool is no longer there. So coming back into these pools up above for one M pattern stab might be something to consider. If we go to the pools which make the most sense since they were the target, it is the 3-month. So the 3-month chopping block, which they came back for that 61 billion, do they come back into these to grab these other 74 billion down below? That is the question. So let's take this and we're gonna deep retrace this down into the full impulse here. Consider this as a single impulse and then go into change this to a deep impulse. We came past the 886 and then stabilized just below the 786 of this entire impulse to the upside. We rejected the point of control here on the wick of the 4-hour here. So this point of control got rejected, and then we broke down beneath that 382 of that diagonal pitch fan. So this point of control has been negated or rejected, and then we saw this sweep of the liquidity down below. So interesting to note how far we came down. The Bart Simpson was true. Took how long to play out? Let's find out. This was about 55 days of consolidation, essentially consolidation, before breaking down at those daily support levels. So the 28K resistance is real. Those daily support lines said no way, Jose, and took them back down to these daily support lines. Where do these daily support lines at 25,356 and 24,872 lie? Well, it's these little wicks here, and if you go back in time even further, we have some consolidation here too. So this is where I'm getting these lines from, and this resistance up here, resistance pocket and resistance pocket, breakthrough, retest, and we're coming back to these daily support at 25K. It's a range, so we wicked into it originally, but we could come back and consolidate here and break down lower. Where we would break down lower, it looks like it would be next Saturday, where this would meet the pavement, where the tires meet the pavement here next Saturday or Sunday at the 236 level of this pitch fan. And then next level would be the mean reversion there. We never got to the mean reversion the last time we dropped down, but we did respect that 236 before. We came big on March 9th. We consolidated around here and then broke through that 236. So these diagonal pitch fans have been quite interesting because it shows where we consolidate and then have a violent move down. Consolidate, violent move down. So the next level is down there at that 24.8 region, but there's not the liquidity to suggest that that would happen. Most likely that would be your idea of a bounce level. Let's go into the Binance chart. I updated the diagonal, the trend-based fib levels. So previously we had a small trend-based fib just within a smaller impulse retrace idea, and it respected those levels within this range. So since we could have done this before this happened if we were expecting a deeper retrace. So what we would have done was you take your trend-based fib level, you impulse click to the downside and retrace to the upside in this manner here. Impulse, retrace. In this case, the impulse is to the downside, the retrace is up to here. So if you look at this on a higher time frame, let's just go to like 12 hours or something. So you imagine this as an entire impulse to the downside and the retrace is to here. And where does that lead you if that's the only high, if that's the high after that moment? Then the 236 model at 29,490, if you can't get above that, which we did not, then your next targets are down below in this region. So we had some consolidation, I believe, in that region here. We were looking at it in this region before it dropped on that Thursday, and basically looking at it in this range, which happened to be the 786. It came back to the 706, and there's always this 706 trap door that likes to open on these. If the permission is to re-enter is rejected, then that trap door opens, and you can expect these levels below the 1382. Let's go and show you an example of that in the past and how these trend-based fibs are so gosh darn accurate. So let's go do that now. We're going to go into the 12-hour chart and go back to here. Okay. All right, so where were we? Was this? I think it was this one. Let me make sure. So it was from here to there to here. Yeah. All right, so in this case, I remember this prediction coming true back in 2021. I had this trend-based fib level here. I had the impulse retrace idea, and basically the 236 entry model was true right about here. Okay, so you had this 236 at 57K, and I remember we broke down, I remember very clearly I was in a supermarket at a grocery store when somebody was asking in a Discord group about where we could possibly go. Whoops, I should have done the replay mode, sorry about that. So they were asking about where we could possibly go when we started to break down at that 236, and I had the levels already charted out here. And I was like, let's just go back to here. And I was saying we could possibly go all the way down to 42K if the Hail Mary play plays out. I was saying we could go all the way down to 42K. And so we started to fail up at the 236 here at 57K. And then, all right, I went too fast. So basically we were at this 706, and I said if the 706 fails at 52,306, we could go all the way down to 42K. And then literally like 10 minutes later, we started dropping like that. So we were up here at the 706, right there. Let's delete this. So we were right here at this 706 level at 52K. 52,306, and then I was like, yeah, if this 52K fails, then we're likely gonna have a trap door open and we could go as low as like I have no idea, but that's how you use these things. And then you could set, you know, Hail Mary take profits at these levels, and sure enough, boom, we liquidated a bunch there. So this is par for the course for Bitcoin, these little stabs, these capitulation stabs to the downside. And then very similarly, we're kind of going this V-shaped recovery and then start to make our ascent up. But eventually we came back down. So this could be used as a fractal to study back in, you know, where is this? December 3rd? December 3rd, 2021. It's very similar price action that I can recall. And we slowly made our way back up, but eventually came back down. Let's go ahead and switch this to hours because it's too fast. So you make your way back into the range, but eventually come back for a double bottom. And this becomes a new consolidation range, obviously. And then basically everyone was expecting a Santa rally, and then we dumped back down thereafter. So this could be the new price action range for a while now, like for Bitcoin, and that's one example of where we capitulated. And if we go back another event in time, let's go to that capitulation time number 2, example number 2. All right, so here, this short I actually did take back in the day. So I was seeing bearish divergence on this, and I took the right shoulder down. So this was, yeah, the bearish divergence was forming here, and this was right when people were talking about adopting Bitcoin as a currency in South America, Ecuador, I believe, and everyone was bullish and asked to go buy Bitcoin as a what's the word, like a solidarity play. And so everyone was asked to buy it as we were coming back and reclaiming some highs and stuff. And we were coming back, you know, potentially to come back here, but we're basically just coming back to this range here. Yeah, we're coming back to that high. And I was just seeing bearish divergence galore on the daily, for example. So before this dropped, I was seeing the daily bearish divergence that was starting to form here. And we were starting to form some bearish divergence, and I didn't have the Williams at the time. I was still new to crypto, but basically we had this huge drop here. Let's just take it. Same kind of dealio, capitulation. I sold off into profit and then was looking at what was going here, but it continued. This was a very violent continuation in actuality. Wait, I thought it goes, no, sorry. The first leg was here. Sorry about that, I jumped the gun. So the first drop was here, and then I took some profits here, and I did not stay for the rest of this, but it was a huge drop down from 50K to 42K in the span of, the majority was in like 10 minutes. Yeah, so this huge drop down from like 48K all the way to 42K in the span of 10 minutes, and then they came back all the way up. So they liquidated all of the longs, liquidated all the shorts, and consolidated and slowly bled back out. So this is similar price action, par for the course number 2 example. You could have, at the time I didn't implement the trend-based fib, so I didn't do this. So if we did it, what would have happened? No, it didn't predict anything actually. But if we do it, yeah, it was a sudden drop. But that was a flash crash September 7th thing. So there's September 7th as an example. You can study that for fractalization. And of course, when I entered the market, which was around here. So I entered the market in about April. So I rode this little bit up and then got trapped in this dump and I had no idea about it. Everyone was bullish about crypto. That's how I heard about it. And I was like, I'll try this out. And I saw some small profits before I woke up one morning with my positions nearly completely worthless. And so, unlike certain streamers who rode this wave up and think themselves great traders because they just happen to draw cup and handles on everything and succeed, there's a funny YouTuber I used to watch by the name of 𝗏𝗏𝗿𝗀, and he did an experiment where he took 100 coins and put them in a box and let his 4 or 5-year-old son pick 10 coins to put $1,000 in or something, and then they were all just coins from 2017, and then his son picked 10 coins and then was basically a millionaire by 2020. So anybody could have succeeded in TA doing this run up here. This was the easiest price action you could expect, and as time goes forward it gets more and more complicated, which is why certain YouTubers are not as accurate as they used to be, and they're just riding the momentum of that timing. So they should be more modest and grateful for the time they entered the market. I entered the market in this trap and basically had to dig my way out and study formulas to try to get to that point. And I don't owe it to anyone, I owe it to myself, and you owe it to yourself to dig deep to find the solution to TA. So yeah, this was Elon tweeted, I believe, and as after this came into fruition, I remember it was something I was like trying to find out what caused it, and it was Elon's tweeting about Doge or something, and then basically they sold off. Fun fact, BlackRock owns a large percentage in Tesla and SpaceX as well, and BlackRock wants to get an ETF approved. And so there's the speculation that BlackRock called in a favor. I remember hearing about that, and that's where I first heard about BlackRock. So BlackRock wanting Elon to basically dump the price so they could buy back more Bitcoin on the down low. And so it's strange, Elon has these reactions, the market reacts to what Elon does. In this case, he's actually sold off some Bitcoin, apparently. So this is what caused this. But this is par for the course, dropping from 28 to 25, 3K is not that big of a deal by comparison. You know, this Luna liquidation event was much worse. That drop there was much worse. So this is par for the course. It's just been so boring that it's kind of comes out of left field, seemingly so. So this is how you draw the fib levels, the impulse, the retrace, the idea, and the resistance potential at 786 levels, and the 65706 consolidation, and the trapdoor, boom, to the 1382 and Hail Mary 1618. We nearly got to the 1618 level, not quite. And now we can turn on to see if there's any momentum that has come back into the charts. Let's see. Hey, what's up, Martos? What's up? Please peek LTC. It's going to reverse, then the returns are diminishing. That is sure. I'll look at LTC. Yeah, sure. I can also pull up the liquidity, by the way, so why don't I do that too? So I'll look up what happened with the liquidity on LTC. Let's see, LTC. Oh, no, it needs to be the 1 minute, sorry. I don't know why they only allow the 1 minute. I guess they have to save it on their servers. LTC, where is LTC? Here we go. Let's look at the LTC liquidity heat map. Please consider subscribing since this is not free material. So here you go. So you had these, it looks like you're imbalanced to the shorts to the tune of $615 million. So you have a short imbalance as of August 16th, really, and you've just been eating at the longs for the most part. So whoever's selling off their positions is eating up the longs. But same thing with Bitcoin. It had that deep drop and gobbled up all of the people, the shorts that opened up into that drop. It ate them up to the 75x level up here, gobbled them up, and then came back into the longs, And then as it stands right now, the imbalance does seem like there's this $24 million 25x position at 66.95 that it could retrace up into. So coming into that character would not be surprising to recover this liquidity void, fair value gap, whatever you want to call it. And yeah, imbalance of 615 million because also up above. So even the shorts that close their position will cause a bounce. So let's say these characters like 13 million and 10 million and 13 million, these guys close out their short. Their closing out the short will be like a vacuum that sucks up the price and consumes the late shorts. So the late shorters will be the ones that have to buy to cover that position closing. So it's the shorts cannibalizing their own. The early players end up closing their position, causing the bounce to suck up to this guy. So this could get at 66.95 on LTC, could get gobbled up, and I wouldn't be surprised. It's a fair value gap, and that's a huge position on this asset that this little bit of happiness could consume. Let me make sure there's no larger positions down below. If you can't even tell though, one thing to note, there's just little small positions of longs here. One thing to, without looking at the bubbles, you can look over here. We called them noodles because these long noodles, the length of them shows you the amount here, 5 million. So you have this one long noodle going all the way to that level of that 25 million level. So that noodle wants to be slurped up like ramen, and they can grab that guy. So there could be a slight bounce at this level to at least recover the vector on LTC. Hopefully that covers what you're looking for. Yeah, the BTC returns diminishing meant that, sorry. Yeah, it's getting harder for traders, as you were saying. Yeah, exactly. And the people that now have like 45K subscribers and stuff, just, you know, bull trapping their audience and stealing their money off their membership. It's pretty pathetic actually, but it is what it is. And like, let's go into the what it is, the daily time frame. We're going to make our descent through the momentum here and turn on our heads up display and see what's going on. So we had the 6 time frames oversold, the cloud was thinning, we got a rejection of the cloud on the daily time frame, and we never made it back above that level. Rejected the trend adaptive moving average. It's actually made by Kaufman if you want to research it, the KAMA. It is one that reduces noise but is sticky to price. It's kind of like your VWAP. Happens to be right at that level, and we reject it. Boom, hard rejection off the adaptive. I just call it the adaptive. So the adaptive moving average coming down for the second time into the oversold region for the Williams. Money flow and RSI are below, getting oversold on the daily time frame. One thing to note was we talked about the 3-day cross-down event, foreboding, to say the least. So the 3-day cross-down event was back Monday in July 24th, and the previous one on Sunday, April 16th. And we referred to the April 16th one saying there were 60 days of downside after that moment. So this could be, if you cannot break the baselines here, beware that some downside may be in store. And sure enough, violence ensued at that cloud level of the 3-day. Boom. And so this cloud tapering here, the momentum, this is a volume weighted cloud. Link in the description for more to read about it. You can scroll down to the features toggle switch everything if you want, or read about one component like the trend cloud. It is a volume weighted cloud formula. And so the volume tapering here, it was holding stable, and sure, now it's going to basically start to thin as a reaction to this sell-off, and this momentum could shift to a deeper retrace if we come up to here and bearishly retest it on the 3-day. We're at the bottom of the Keltner channel. We wicked off of the weighted moving average. The previous time we had a reaction on the weighted moving average on the 3-day, we saw upside there, but there was more confluence with the cloud here as well. Do we see this weighted moving average reaction? This is interesting. That's why we didn't come down to the 618, I suppose, because we came down to that weighted moving average level. We broke as of this moment, we have broken the super trend on the 3-day. So all of those stops were taken out for the larger term players. If we look at the 5-day time frame, 5-day previously closed off the cloud, so they came back into the cloud and closed the candle on the cloud. So now what do they do from here? There's a weird reaction of the volume here on the cloud, thickening up into this large amount of volume buying up and getting sold off into this. So this level important on the 5-day. In the next 4 days, watch for it. We had this steady trend to the upside, boom, bouncing off of the cloud here on the 5-day. This cross down event has been remaining cross down. You have been seeing this double top scenario on the 5-day, rejection off of the weighted moving average on the 5-day. And if we go back to the daily time frame, so the daily time frame is completely oversold. We're outside the Keltner channel. What is the Keltner channel? Well, it is an ATR based Bollinger Band, which is a little bit more accurate in my opinion than Bollinger Bands. But you come back into this slightly recovery of the vector candle, similar to the LTC, would not be strange to imagine as the
okay, so before we get to that,
so there's, where is it? So the imbalance, as we said earlier on BTC, was for the tune of $24 billion. So the $24 billion imbalance should see some sort of a retrace into that vector at this time. Now this one did not recover it until we came back now, so it doesn't need to occur exactly immediately. We just went over some examples of how they went sideways and consolidated in that range and then eventually dropped down on Christmas, for example, or in September 7th into October before they shifted out. So it took a month and a half for them to shift out, so it doesn't need to occur immediately. We've seen how stagnant price action can be. All right, so going into the 12-hour time frame, actually, let's go to the 22 at this time. Let's see what our 22 is doing. 22 low and poised, 0 level for the normalized MACD. You could see some sort of bounce here. The baselines coming to that price action need to see some sort of reaction. We are on the weekend. Don't expect much to occur. Maybe an exchange or two will go grab some liquidity, a market maker or two will go grab some. 12-hour time frame completely suppressed and oversold. It's getting to that position. The baselines need to come down a little bit more for my liking to scoop that price up. If we go to the 6-hour, and yeah, you could be getting this reaction off of this level. This is what you like to see, the kind of everything in a low position here. Liquidity grabbed and imbalance in the opposite direction. It's kind of expectant to see at least some sort of retrace up into this region. You are getting the 6-hour time frame to appear above the baselines. 4 hour already starting that path. You got the candle above the two baselines. It's starting its potential ice cream scoop crossover event to the upside. You got a 5% super trend to kick all the way up to 27,460. Let's see what the liquidity says in that region. 27,460, let's see. 27,460. Yeah, there's a $257 million 100x position there at 27,479. 27,479. Let's mark that off. 27,479. Let's go ahead and zoom in on that. 27,479. Yeah, that'll put you right up at the super trend. So it's kind of funny how the super trend coincides with that liquidity pool in this inside this candle. So coming back up to that at some point being the key word, is that going to be some sort of push buyback wick on the weekly? I don't know. 4 hour time frame is oversold, 6 hour time frame is oversold, 12 hour time frame is oversold, 22 hour time frame is oversold, daily time frame is oversold. Hourly is overbought. You had previous bullish divergence on the RSI here, slight bullish divergence. You have a lower low on the price, higher low on the RSI. See the crystal there? That's the crystallized divergence, the auto divergence formula that we have on the money flow. And the RSI, you had some bearish divergence, hidden bearish, which played out, boom, and dropped down lower. Starting to get an ascent and cross up of the normalized MACD. Can we continue this path to the upside? The stochastic RSI getting fatigued off the 786 rejection point. Cloud is very thick on the hourly time frame. The hourly time frame momentum of sell-off is very strong. To negate that, you need to see some conviction close above it in a similar manner, and then you come back, you retest it, and we talk about that all the time and how that would curve if that was going to occur, and then you'd find that high probability in that play there. Okay, so if the cloud starts to curve and shift and get thinner at a certain point, then that's where you would kind of look for that idea. If we go back in time to where that occurred before, for example, here, you see the cloud thinning, and then you came back and then you kissed the cloud, you did this little breakout, you came back, you kissed the cloud, and boom. And so that was your higher probability trade there. And then that gives you a 6% on BTC is very good, and it turned into a larger play up to the upside. And this was the original rocket ship that occurred back on that Thursday. So this type of idea is what you would look for ideally if you were going to make your ascent out. So how was the stochastic and all that stuff at that time? Let's go back and compare price action. That's what you do, back test, right? So the hourly got overbought, and then it got overbought when it surged out. So in this consolidating range, it did kind of get overbought over here, and we did go sideways. And in that last spurt above this level on a Friday, we got that surge up, new pricing range. So just because you get up in this region does not mean immediately short it or assume that it's going to drop. We did have the bullish divergence on the money flow too, and then we shot up here, and then we held. The key was we were holding this range, and then we broke down, but then they came back to this level, and the cloud had already started to shift at that point. So you could have just taken that idea for a higher probability trap of shorts to the upside there. And that's ironically the range that we're back in right now. Do we see that aggressive continuation to the upside like that? No guarantee about that, but basically, if that's what you would like to see if you were going to consider a market reversal on that retrace. So taking it down here, not necessarily the smartest play per se. Asian range, getting 6 time frames oversold. We are reclaiming that everything's fractal in nature, so it's already starting to do that with that shift of the 15-minute here. It's a lower time frame, so it has a lower probability and lower weight to it. But we do have that 6 time frames oversold. At some point, something would insinuate retracing into that liquidity up in these regions. You do have more open up here in the immediate range. If we just zoom into the immediate scalper range, some induced shorts up here at 26,397 could be a target. Not really seeing so much interest as the capitulation to the longs was strong. Their interest has significantly taken a hit. So when you see this interest in shorts outweighing the interest in longs, that's when you could consider coming up to this region at 26,610 or 26,73 or 26,91. Like coming back into the 27K region would not be absurd to think. Coming back into these levels, these liquidity pools are real. So at some point, what does Asia do in handing it off to London? Asia has essentially gone sideways. It is the weekend, so I would expect some consolidation for Saturday and Sunday. As it stands right now, you have the cross-up event of the baselines, and the baselines are holding. So we talked about that previous time where it comes up. Cloud is thick though, you don't have the cloud on your side. So that's what I mean by coming up and then recapturing that cloud and then shifting the cloud and then taking that higher probability off that reaction. So if it goes up and comes down, then it potentially goes higher. And then you have your shoulder, head, and shoulder kind of idea. So we're low liquidity weekend, just solid technical analysis of what happened and how it's happened before, and it will happen again. It's par for the course for BTC. Let's go see what the chat is saying, and then we will bid you adieu. Oh, thanks, Wizard at High Block. Yeah, I've been using it pretty well for the last few months. It's pretty nice. The other one you wanted to peek was the quarterly close coming up. Look at it, bro. What's the quarterly close? How do I check that? Is that like 3 months? A quarter is 3 months, right? 3, 6, 9, 12. Yeah, 3 months. So that's coming up in a month and 12 days. Is that what you're talking about? I need to turn off my indicator because it's too big of a time frame, and go to a chart without anything on it. Let's just do that. You're talking about the quarterly of BTC. Month and 12 days. I don't know what type of thing I can glean from this, but I mean, basically, I when I want to look at something in high fidelity or see where the pools are, one thing that's interesting is this 2 year, the 2 year for BTC. So we previously zoomed in on this and we were talking about how the largest pool was at 24.4 and they came back for it. So now the largest pool is up here at 33.2 with $600 billion up there. So looking at where this heat is generated. So like people, I remember when some YouTubers were calling for like 40K when we hit this 30K price range. And I was like, I don't see it because there's no liquidity. And so there was no liquidity to justify a move up. Like you can't just move up unless there's some other loser at the end of the trade. Like you can't have a winner without a loser. So when that dropped down here, there was a bunch of liquidity for it to grab to come down to 15K. You can't go to 15K unless there's somebody to liquidate. So same here, it came all the way down to liquidate the people. So now you have these paths paved all the way up to that 36K region. So it makes more sense that then they would come back and grab this $600 billion. And the last time they did that, I remember back here in February when they left $160 billion on the table, and I was like, that's crazy. And then they capitulated down to 19K, and then I said they're going to come back to this at some point because that's $178 billion. And then little did I know that Silicon Valley Bank failure would cause everything to surge like it did, and it went up and grabbed it. So you know, I wouldn't be surprised, let's say, if BlackRock ETF gets approved and then they go grab this, and BlackRock got Elon to dump it so they could buy it here on the down low more, and then they profit. You know, it's all manipulation for liquidity anyway at the end of the day. This is the game we play. And so I look at this one. This is 2 years of liquidity right here sitting in the charts. You see this 64 billion now coming to that range. You know, you can see all these pools up above open like marionette strings. So I don't really know what I'm looking at here, but I'm open to hear what that might be. All right, so coming back, rounding it back again to the momentum. Boop, boop. Yeah, so as it stands, you're scooping up the price now. Previously, you didn't have that here. So this was your capitulation to start to round it out and potentially start to build a narrative shift to the upside. We already put out that pool. The super trend coincides with that at 27,476. So there's the weekly candle close and then maybe retrace. I don't know, but we could just consolidate in this range for some time to build the pools up again after that traumatic event. So we'll keep you posted. We're once again, we're below the 786 of that previous impulse to the left. So this is something where we're at those levels to potentially break down and go grab those pools below. We talked about the pools on the 3 and the 6 month that are insinuating to come grab me first before you shift out. Don't forget about me. I'm $180 billion down here at 24.3. So they could just come back to that at some point too before considering going higher. All right, well, that's my story, folks, and I'm sticking to it. So thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing the fire, the accuracy, the precision, all that fun stuff, and we'll catch you on the flip side. Peace.